breaking. Bank of England this time and the HM Treasury released a 116-page report exploring the creation of a digital pound. Among the components discussed are an expanding range of APIs to meet user needs. Let's take a moment to recognize that. So since last Friday, we basically talked about the whole significance of the IETF, SATP. Brought you guys a particular video a few days ago in regards to that, right? On top of that, Sean and I on Utility Talk Now, new show that aired yesterday, same time slot, 9 p.m. Eastern, 6 p.m. Pacific, we got more into it, more of a deeper dive. Then also released that particular deep dive video this morning. So if you want to catch up on it, you can. It's really, really significant to see what they're doing with APIs, right? Payment APIs, banking sector, you name it, right? So it says this is Quant, and we already established that particular connection. But check this out. Gilbert goes deeper in the attached thread. I'll show you some key highlights. So look at this. The key features that will be delivered in the improved service are the bank will increase transparency, efficiency, and speed of information exchange through adopting the ISO 222 standard and through the provision of APIs, and plans to expand the range of available APIs over time to meet user needs. This is another reason why that the IETF, for instance, that particular Internet Engineering Task Force picked the likes of Quant instead of just picking anyone out there, right? They understand that Quant has been around for quite a while, just like they've been around for dating back to the 1980s. These people have done this for decades now. So they understand that Quant's overledger is huge because of that quote unquote interoperability. I think this is massive. This is really big news. We'll get into some of Gilbert's comments here in a bit. But look at this. The digital pound model must support innovation and competition. Well, no duh, right? But look at this. Right here, it says layered architecture comprises the public infrastructure, the core ledger, and a significant role of private innovators on the customer-facing layers, wallets and devices, and standardized components, API interface. These elements are important for supporting ongoing innovation, ensuring the platform model can keep pace. Yeah, keep pace with developments in payments habits and the wider digital economy. It says this is Quant. Now, I'm going to show you guys part of this particular thread, and this comes straight from Gilbert. So why does the UK basically need a digital pound? Or how about this? Why does the United States need a digital dollar? Let's get into that. So he specifically mentions there's primary motivations behind this. Well, what is it? Well, they want to ensure the role of the UK central bank is an anchor for confidence and safety in a, well, let's face it, a new monetary system, right? It's one thing to complement the current system, but it's one thing to go to a new complete system. So they're promoting this particular innovation by making it, more efficient and so on. They're fostering stability and growth with access, innovation, and choice. Look at this particular diagram. We're going to blow it up. So it says our primary motivations for the digital pound, a little bit kind of like what he was mentioning, but they are hoping that they can sustain access to financially risk-free, listen to this, risk-free central bank money as the anchor of monetary and financial stability. I want to take a moment to reflect on this. So a while back, we showed you that particular guy who has worked with the central banks, and he mentioned in the future that watch out for when, it's the UK, especially Europe drops, for instance, either a digital euro, a digital pound. And what you're going to see is they're going to start things off with, for instance, the poor class, the middle class. The last that will get this actually will be the elites. And the reason for this is kind of like what you're seeing right here. It is basically a risk-free thing they got going on because they already realize that they need to get this out and they need it to be fully utilized. And by having it fully utilized and not having where, all this stuff moves slowly, right? Recognizing these new particular technologies, that it takes that risk away, right? Look at some of these other things mentioned here. Other motivations include enhancing financial inclusion. We already know that particular connection. Payments, resilience, and improving cross-border payments. So for everybody who's stating that Quant is not part of the mix, of getting cross-border payments done, that could be further from the truth, right? They are definitely part of the mix. It might not be necessarily like, oh, I'm transferring from border to border or overseas the actual QNT token. No, no, no. It's understanding what they bring to the table as far as their innovation and so on, especially with the likes of Overledger. So there's a little bit more in regards to all this, promoting innovation and so on. I want to jump more into this. It says the technical bit about the CBDCs, and this is the main area I want to bring to your attention. So when we click more into this, it states this functional requirement is needed to integrate with the existing financial system and payment rails. You've already seen those particular partnerships. You understand that Gilbert Verdian already has that particular experience. He's worked for that particular branch of Visa, right? So look at this. Table A, summary of CBDC functionality and features, categories, functionality and features, payment devices. You have smart devices and physical cards, existing online in-store point of sale infrastructure. Want to talk about infrastructure? There's some of it. Internet of Things, wearables. How about this? Wallet management, opening a wallet, viewing balances. All these things are basic, but they have to be covered, right? Especially understanding where all this money is going to move to and from. You want to talk about payments? How about this? Real-time one-off push, peer-to-peer, person-to-business, both in-store and online, cross-border, offline. Scheduled, micropayments, batch payments. And for instance, at the last one, interoperability. Of course, that's big for Quant, right? Moving between CBDC and other forms of money, particularly cash and bank deposits. Pretty interesting stuff. There's a whole outline about this. About privacy, security, and so on and so forth. There's one more particular area I want to get into before we kick it into this last one. And I'm going to read these last two because I think when we start getting more of this regulatory clarity, right, and compliance, this is what helps Quant stand out. So this was posted about like a few hours ago, right? Gilbert stated this: today, law enforcement and government agencies under what is allowed by law can request financial and personal data from commercial banks to investigate crime. Now, I want to state this. There's a particular show I watch, and I'm going to bring it to your attention here in a little bit. Some of you guys may already watch this, believe it or not, but they have pointed out this whole thing about they're putting a lot of focus on, and I'm not trying to turn this into a political show. Believe me, that's very divisive, let's face it. But they're requesting that campaign money that was sent to likes of the Democratic Party and even the Republican Party, those donations from FTX, they have, and basically, I think it's until the 22nd of this month to figure out what the heck they're going to do with that or return the money. Otherwise, they can face some of these harsh, things basically from what you literally see kind of like mentioned here. Now, hear me out. All right. So I'm going to restate this. Today, law enforcement and government agencies under what is allowed by law can request financial and personal data from commercial banks to investigate crime. And when I saw this also mentioned on this other particular program, and I have to show you guys the name of that one. It starts with an R, but I just recently subscribed to them. I kind of was able to connect the dots here, if you will. It says the law and the same approach will still apply to CBDCs. This last one, it will be the same as today's AML KYC regulation, where commercial banks are responsible for compliance and managing the relationship with their customers, complying with the same rules and regulations as today with non-CBDC money. So it's not like we're just, recognizing that we're getting to CBDCs now and everyone has to jump through giant hoops. It's recognizing that we have the old approach. We're proving on the old approach with this new compliancy, if you will.
Thank you so much for watching, guys. If you have not yet subscribed, do yourself a favor and subscribe for more information on the ISO 222 compliant tokens, and hit the notification bell to make sure that you are aware of the new videos when they come up. Max and I cover these ISOs, and we also have a live show every single night at 9 p.m. Eastern Standard Time. Make sure you tune in for that. You won't want to miss it. Thanks again, and we will see you on the next video.